Welcome back to the Tax-Free Millionaire Blueprint. And today we're going to be talking about Kim Kardashian. So when Kim Kardashian first hit the scene, we were wondering, and a lot of people were speculating about who she is and what her family background is, and just in general who she was as a person or entertainer, whatever you may call it. So we're going to talk about what Kim Kardashian's brand teaches us about taxes. So when most people hear about Kim Kardashian, they think about reality TV or social media. But from a financial perspective, Kim Kardashian is actually one of the most interesting business case studies in modern brand income. Because what she's really built is a personal brand that generates multiple streams of revenue. And there's some important tax and business lessons hidden inside that model. So Kim Kardashian isn't just an influencer. Many people still think of Kim Kardashian as someone who simply posts on social media and get paid for endorsements. But the reality is much bigger than that. Over the years, she's built businesses including Skims and KKW Beauty, which most people know about. These businesses generate revenue through product sales, licensing, brand partnerships, and also intellectual property. And this is where the financial lessons begin. Because the biggest money isn't usually made from one paycheck. It's made from owning the brand behind the income. So, the power of brand income that Kim Kardashian has created. When multiple brands, or when someone builds a brand the way Kim Kardashian has, the income typically comes from multiple categories. For example, product businesses. Companies like Skims sell physical products worldwide. Licensing and partnerships. Brands pay to collaborate or attach their products to the brand name. Media and appearance income. Television, media deals, speaking engagements, and also equity and ownership. So instead of being paid for one promotion, a brand owner can own part of the company. And the last one is very important. Owning part of the company, because ownership changes how wealth is built. Okay? So, brand income versus salary. One of the biggest differences between brand income and traditional employment is income is how it is structured. A traditional employee earns salary, bonus, benefits, but brand entrepreneurs often can earn through business profits, licensing deals, equity value, intellectual property. And these different types of income can have very, very different tax implications depending on the structure. So let's talk about it. For example, business owners may have access to things like business deductions, retirement planning strategies, and also entity structuring options. So the business structure behind big brands is very important. When someone builds a major brand like Skims, the income usually doesn't just overflow directly to a personal bank account. Instead, it typically flows through business entities. These entities handle the things like brand ownership, licensing agreements, product sales, and partnerships. So the structure allows the brand to operate as a business ecosystem rather than a single paycheck. So Kim Kardashian has created an empire rather than just being an influencer. And this is something many professionals start to think about once their income reaches higher levels. Because income grows, planning often becomes more important than filing. The intellectual property advantage. So another interesting piece of the brand model is the intellectual property. In Kim Kardashian's case, the brand itself has value. Things like the name, her brand name, her product design, the marketing assets, and also her licensing rights. So when you think of Kim Kardashian, you think of more than just one thing when you think about her, right? So these are her assets, and these assets can generate revenue over and over again, which is very different from traditional time for money model. This is one of the reasons many entrepreneurs eventually focus on building assets rather than just income streams. Now, most professionals are not building a billion-dollar fashion brand, but this is the real lesson for professionals. The concept behind the brand income still applies. Many high earners eventually begin thinking about consulting brands, professional practices, product lines, intellectual property, educational platforms. You don't have to be Kim Kardashian to build these types of incomes. In other words, ways to convert expertise into scalable income. Because the more your income depends on assets instead of hours, the more flexibility you create. This matters for tax strategy. This is where tax planning becomes part of the conversation. Okay, so when income comes through a business structure, planning opportunities can look different compared with traditional employment that we are used to, or a 9-to-5. This becomes very different. That's why many high income professionals begin to focus on entity structure, retirement planning, investment strategies, and long-term wealth planning. The goal usually isn't just earning more income. It's building a structure that supports long-term financial growth. So when people talk about Kim Kardashian, they often focus on the celebrity side. But financially, the bigger story is the brand ecosystem, or the empire that she has built. A brand that generates incomes through products, partnerships, intellectual property, and ownership. And while most people won't build a global brand like Skims, the underlying lesson still applies. Understanding how income is structured can be just as important as how much income you actually earn. So if you enjoy breaking down celebrity money stories and financial lessons behind them, subscribe to this channel, because there are a lot of interesting strategies hidden inside celebrity business deals. And sometimes those stories can teach us a lot about how wealth is actually built. Thanks for watching, and I'll see you in the next video.